Hi everyone, NS here from Nest Capital. Welcome to my channel. Today I'm going to um, talk to you about the trade I'm on currently and how I entered the trade. So I entered this trade off a 1 hour chart, and how I entered this trade was basically using the fib. So price pushed. I didn't get this buy. I wasn't on this bullish move. So what did I do? Um, Seeing that the market had moved upwards, you don't just jump in, and that's a mistake most of you traders do. And I made this mistake at some point too. Whenever the market is moving up, oh wow, the market is bullish, it's really pumping, I need to jump in, and then enter the trade, and next thing the market reverses against you and you're out and you're wondering why, right? There's a saying, right? You don't jump into a moving car, isn't it? You wait for the car to stop and then you enter. So basically what I did was, after this move here, I just waited to see if price was thinking of retracing, right? Maybe the market started pushing this candle and bringing this candle right here, right? And I'll use my Fibonacci retracement tool, and then I I took the tool from the low to the high. Most of you don't know how to use the Fibonacci retracement tool. Let me do it again. Delete it. You go to the top of your bar, you pick the fib tool, or you can even come from here and then you go to Fibonacci and then you click retracement. You pick it right there. You pick for you to, if it's on a bullish move, right, you go from the low to the high, right? So this was where the market got to before it started turning. When I saw this candle, and I said, okay, the market is thinking of retracing, right? So let me look at where it would retrace to for me to jump in. Now the levels I look for is the 38.2, the 50.0, and the 61.8 levels. Those are the levels that I'm interested in. 38.2, the 50 level, and the 61.8. Anything different, I'm not interested. So I'm only interested in the 38.2, 50, and 61. The 50 level and the 61.8 levels are sweet spots. They're usually more rewarding. Okay, they are usually less risk. Again, that doesn't mean that you might get into this trade here and you lose it. Remember, the market does what it does, right? So that's why you always have to have good risk management and define your risk. So basically, that's what immediately the market moved to this point and started retracing. I just drew my fib and waited for it to come. Now I didn't make any move until it started approaching these levels. All right, I entered this trade when it got to my 38.2. Okay, go to the 15-minute chart. You can see it. Okay, immediately it started touching this level and started showing me certain candles. Right, I just bought, and then I put my stop loss on the low of the 1 hour candle here. This low here, that was where I put my stop loss. Remember, you have to give your stop loss room. Basically, the idea behind the stop loss was that I was saying, okay, the market could come to 50.0 or 61.8, which was all right for me, and I planned on even adding some positions, remember, but my stop loss was still going to be beyond this. Okay, anything, if the market comes beyond this point, I'm off. Yes, it means I'm really wrong, right? Now the market can still come here and still go up. It is what it is. It's the market, right? So basically, once the market got to this level, went to the 15-minute chart, looked at it, I entered my entry, and I kept my stop loss here, and then waited for it, and boom, the market is moving. I'm still watching out to see where the market is. This is where my target is. This is my target for the day. And remember, you should have good risk reward ratio. 2:1, 2:1, 3:1, 3:1, 4:1. Good risk reward ratio. So that once the market goes against you, even the market goes against you twice, right? Just your one winner clears up that debt, and you're either break even again or you're in profit. So good risk reward ratio matters. So you have to have good money management for you to be able to be consistent and profitable in this game. All right. Okay, let's see how this market, this trade plays out. I'll be back to give you an update on the trade. Let's see if it hits my TP or not. Um, Either way, we'll be fine. All right. All right, guys, we're back. This is the following day, 22nd January. Our pound yen trade ended up in a loss. Market ended up going against me and stopping us out. Remember, we were aiming for a higher take profit at 42.5 ish or so, but the market ended up coming back to stop us out at 141.608. So this was where my stop loss was. Yeah, somewhere around here, 608. As you can see, we were stopped out by this week here. Remember what I said, it is what it is. So we'll move on to the next trade, and no hard feelings. Don't try to tie any emotions against it. The market might still go back up and get to a take profit. That's how it is, but you have to know in this market what you signed for. This is how it goes on this market, and that's why your risk to reward ratio really matters. Now we've taken a small loss. Okay, we've taken a small loss, about 20 pips. Okay, to now because our stop loss is little, we can afford to, you know, go for another trade, and our trade can cancel that loss and, you know, break us even or even better its profit. And that's why risk to reward ratio is very, very important. It is key. Risk to reward ratio, your money management. Okay. Yeah, the market didn't give me enough room for me to break even. If he had broken the structure or went home, I would have broken even, but he didn't give me that, and I came back and stopped us out. It is what it is. All right, guys, take care and happy trading. Trade safe.